Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. With me here today is my colleague William, a senior dealer and marketing executive from Phillip Futures. How are you today, William?
Very good. Thank you, Trent. How are you yourself?
Okay, thanks. Welcome back. So for today's podcast, we will be discussing on the topic US indices, can the bullish momentum persist? So to our audience out there who are currently trading US indices futures or interested to trade US indices futures, do not miss out this podcast. Once again, I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. So without further ado, let's jump into our topic for today. US indices, can the bullish momentum persist? So the S&P 500 and Nasdaq indices have gone up by 100% from low of April 2020. With the FOMC meeting coming up on 23rd September, and Fed Powell indicated that taper could start this year. So William, how will the upcoming FOMC meeting affect the US indices?
Okay. This is a very good question, Trent. So usually the main agenda of the FOMC meeting is always to discuss if Fed should start its bond tapering. Okay. So bond tapering means that the Fed will start to reduce buying its bond, then reduce the liquidity in the financial market. So in my opinion, in the short term, say 3 to 6 months period, right, Fed will not want to reduce the liquidity in the market. Why do I say so? There are three main reasons why I say so. So the first reason is because the current chairman, the Fed Powell, okay, his terms as the chairman will end in February 2020. So if he wish to continue its current position as the chairman, I reckon that he would prefer the market to continue to prosper, okay, for the market to continue to go up, because that will help him to continue his term as the chairman, okay, of the Federal Reserve. For the second reason, if you look at recently, last week on the 3rd of September, if you look at the non-farm payroll that has been announced, okay, the increment of the non-farm payroll was only 235,000 increment. Okay, that is the weakest increment in year 2021. Okay, so non-farm payroll and employment rate is a very, very important key indicators for the Federal Reserve to decide whether they should reduce the bond purchasing, okay, which is to taper the bond. Okay, so looking at the current weak employment market, or not the strong or super strong employment market, okay, the Fed, I reckon, will not want to taper at the moment, okay, in the short term. So the last reason why I think that in the next 3 to 6 months we won't see it is because if you look at the PMI index, right, PMI refers to the manufacturing purchasing indexes. Okay, so basically it allows us to see how strong the economy is, or how the businesses is perform, okay, from their purchasing activities. Okay, so this is the PMI index. So if you look at the PMI index, it has been on a downtrend since May 2021. Okay, so this means that the businesses activities are not strong enough yet. Okay, are not strong enough yet for the Fed to taper. So based on these three reasons, I personally think that the upcoming FOMC meeting will be bullish for the US indexes. And if you look at the two most recent FOMC meetings, the US indexes actually went up after the meeting. Okay, so yeah, this is my own view on how the US indexes will react to the FOMC meeting.
Okay, let's see how the US indices will perform after the FOMC meeting announcement. So for our next question, among the 4 US indices, which is Dow Jones, S&P 500, Nasdaq, and Russell, which index do you think has a better trading opportunity from a fundamental perspective?
Okay, actually not just from fundamental, be it from fundamental or from technical, right? For me personally, I'm more bullish towards the S&P 500 and Nasdaq. Okay, why I say so? So the fundamental is that the 10 years Treasury bond yield and technology index, right, such as Nasdaq, they have an inverse relationship. So inverse meaning that as long as the 10 years Treasury bond yield is at low, okay, Nasdaq will go up. Okay, so if you realize that Nasdaq has been really bullish recently, okay, so why is Nasdaq so bullish? Is because the 10 years Treasury bond yield is on a downtrend. okay, since May. Okay, so this is the main reason. And if you look at all four main indexes, Nasdaq is actually the most bullish among all. Okay, so the reason why a low treasury bond yield will be favorable is because that technology stocks is heavily depending on bank borrowings or on bank loans to grow their business. So in a low interest era, right? It's actually low interest era is really benefiting them for their bank borrowings and stuff. Okay, so this also proves why you mentioned earlier that S&P 500 and Nasdaq has actually gone up by over 100% since the low of April 2020. Yeah, but Dow Jones and Russell have not seen that 100% yet.
Okay, yes, indeed, the S&P 500 and Nasdaq is performing better than the other two indices. Okay, so based on the index that you have mentioned previously, what are the price levels should investors look for trading opportunities?
Okay, so Nasdaq itself, right, it has been respecting its 20 days and 50 days moving average like super well since the April of 2020. Okay, so as long as the price retraces back to this level between the 20 and 50 days moving average, I reckon it will be the perfect time to long the Nasdaq indexes. Okay, and that range will be somewhere between 15100 to 15400. That would be the range if you ask me.
Okay, let's see how Nasdaq will perform and the price level which you have mentioned. For our next question, what are actually CME Micro Futures contract and the benefits of using micro contracts to trade US indices?
Okay, so micro contracts, if you ask me, are actually really amazing products. Okay, they have very favorable margin with very easy to buffer value per tick. So CME US micro contract, right? I think they are just great because they allows you can use it to ride the entire trend, or if you are traders, the liquidity on these micro contracts are actually amazing for you to scalp. Yeah.
Yes, you are certainly right. And to our audience who are interested to trade US indices, you can now trade the CME Micro US Indices futures with Phillip Futures. As this futures contract margin is 10 times smaller than the standard US indices E-mini contracts, investors with smaller capital can now participate in the US indices market. Not just that, we are currently having a promotion from 1 July to 30 September, and clients get to enjoy a low commission rate of only USD2 per way for the CME Micro US Indices futures. So for more details, you can drop us a message on Facebook and our representative will get back to you. Okay. Lastly, before we end the podcast for today, one last question for you, William. What else should investors be aware for the upcoming weeks for trading the US indices?
Okay, for upcoming, definitely like you mentioned in the first question, okay, is the FOMC meeting outcome. So as long as the Fed do not give a timeline, the exact time point on bond tapering, I reckon US indexes will continue to move. So any correction are definitely good opportunity to enter to long.
Okay, yes. So investor, for all investors, we hope that the bull run will continue so investors can ride on the uptrend. And now we have come to an end for today's podcast. If to our audience out there, if you have any question or any topics you want us to discuss next week, you can message us on the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time too, William.
Thank you. Bye-bye. See you next time.
Bye-bye.
Bye-bye.